Good morning, YouTube. Good morning, YouTube. A little bit through the Thursday New York session. Didn't really trade it yet. Had a good day for the ODR session. I've just been kind of watching. I missed a couple of good opportunities, but I'm waiting for a bigger move here. I've got my other screen. I've got my IDR box open on the screen over here, so I'm keeping track here, but I'm executing on my Trade platform, so I have to copy my lines over, and I don't have like the standard deviations and some of the lines for the retrace grid, but I've got them over here so I can see. I keep this one on the 1 minute time frame, and then I have the 5 minute time frame over here. So I'm kind of waiting for, I was hoping price would dip down into this fair value gap down here. That's kind of where I was waiting for my entry. I was trying to take the one that was the most extreme, farthest away. But it never did quite get there. Now I'm kicking myself because I didn't take it when it was like one tick away. That would have been, my 5-6 handles. I'd have been done, but it is what it is. I'm really expecting for this to break. I don't know what this white line here is for. Yeah, we'll get rid of it since I'm not sure. Okay, so that's the IDR, that's the DR top, center, opening. And then since it went this way, I didn't really put all the lines down here. I don't expect it to make it back down that far. But there's some relative equal highs over here, so pretty sure before the day's over, that's going to get taken out. That's just too juicy for the algorithm to pass up the buy side liquidity over there. So just a matter of which PD array gets tapped to launch it up into that area. Once it breaks the DR top here, it could go all the way up there, but it likes to meander, so there'll probably be some consolidation somewhere in the middle here, then a retest, and then a final push maybe after lunch. Going into the session close, sometimes there's really energetic moves that take out those highs, like in the last few minutes of the session. I'm not sure I'm going to be able to wait that long. I've got some other stuff going on, and like I said, I already had a good ODR session, so I'm not going to be impatient at all. If I don't make another penny today, I had a good day, so just waiting. I'm going to pause the video here. I learned how to use pause on my software, and I'll pick it back up when we get something that's exciting enough to video, rather than just making a long video of consolidation. See you soon. Alright, so price did pop up above the DR. Over here you can kind of see it's bouncing off this 15-minute order block that's from over here. So that would possibly give it some cause to retrace, pick up some of this liquidity before eventually bouncing back up. So I'm expecting a move somehow, somewhere down in here. I wouldn't even be surprised if it comes down into this fair value gap right here, and then eventually comes back up to take out these hourly relative equal highs. So if we go over to the left, you can see what's causing all that. So right here, the equal highs, order block right underneath it. Some weekly DRC clusters. It already pushed up through that, so it was quite a fight to get through that, but it made it up through that, and that might It could act as support right here, you know. There's nothing saying it has to bounce this far, but if we look at DR lens, we can kind of get an idea of what the expectation is for a retrace. So let me pull that up. Okay, DR lens, max retracement. Yeah, I mean, the odds are as good for it to stay outside of the DR as it is to go in. I mean, you got 14 instances here and 14 of them here, so this is kind of a cluster. So between 2 and 3, maybe, if it comes back at all. The next one would be 4 to 5, 4 to 6, somewhere in there. So for right now, I'm just going to see what it does. I'm expecting that order block to push the price down. And just how deep, I don't know. 41, 40, 50. 41, 40, 50. So the top of this fair value gap is about the range of the retracement according to DR lens. So I would look for it to come back in here. If it comes back to here, I'd probably get in, put my stop loss a couple ticks below the opening line. But like I said, there's nothing saying it has to do that. It's just that order block up there kind of leads me to believe there's a good possibility. And the way this is set up too, it almost looked like it was building liquidity for a sweep back down through here before eventually taking off. Let's see how it plays out. If it just takes off from here, I'll just miss the trade. That's all there is to it. I'm not going to chase it. Alright, so I guess I'll pause again. Alright, coming back into the range. That bullish or bearish order block did have some effect, so that was beneficial to have that there for consideration. I would have liked to take the trade off of that, but still kind of getting used to the feel for those. I know the middle, I could have put my stop loss right at the middle, maybe a tick or two above, and considered it pretty safe. So usually if it's going to hold, it'll hold to that point. I'm on a 5-minute time frame here, and this is a 15-minute order block, so chances are on the 5-minute there's another one inside this that accounts for this little bit of movement right here. But so far, we're on track. Like I said, I'd like to see it get into at least this one. If it comes down here, I will probably get in with stop loss 2 ticks below the DR middle or IDR middle, and let's see what happens. I know this will get taken out eventually. It could pop here, come up, and then come back, but this isn't going to get left alone. This will get taken out sometime. And who knows, even down here, a lot of times on the New York session, it will rally up there, take out this external liquidity, and then turn around and come all the way back down and take the sell side. So there's quite a bit. I don't see it coming all the way down here. This is from the CPI yesterday and the FOMC minutes, so I think that's pretty safe for the low of the week. But these could be probably not this one, because this one popped down here. This is definitely possible. This is very highly probable right here. We're almost there. Now, if I miss this by 3 ticks, I'll be irritated, but I'm really trying to go with what I plan and not just, jump willy-nilly into a trade. My plan is for it to reach into this fair value gap, and I consider that risk acceptable down to here. And until it gets there, that's more risk than I want to take on. So that price point's 41.25. Yeah, that'd be 5 points. So I don't want to risk that much. I have to come to 36.75. That would be 4 points right there. Ideally, towards the bottom of this one would have been perfect for me, but it doesn't look like I'm going to get it. And let's see what we can expect for the max extension. Max extension, the median is 1.3 standard deviations, but I mean, decent probability for 0.3 to 0.4, but then it goes up quite a bit from like 0.6 to 0.9. So if we look at that over here, 0.6 to 0.9 would be somewhere in here. Which that would, that would be right in line with my idea that these relative equal highs are going to get taken out. So I think the 0.6 is a pretty safe first target, maybe with a runner, because that is another 5 points up to 0.9. And there's no saying it couldn't go higher. I mean, there's some good high probabilities all the way up to 1.6, 1.7, which would be up in this area, which would be huge. Time for max extension. So the time for the max extension is generally later in the afternoon. Let's make sure I'm on true long, yes. So the time for the max extension is pretty much right up at the end of the session. So expect a retrace here. Pretty safe to get in just about anywhere. I'm going to look at the false day data real quick just to make sure I'm not jumping the gun, just in case. I found this to be handy. Like if I go here and it shows a very small retracement. Yeah, so see, the retracement for a false day, I mean the extension for a false day is 0.4, 0.5. And I'm not really there. So yeah, if it would have came up a little higher, it would have been a higher possibility for a false day, but it didn't really reach the false day yet. So I never want to assume false, but before I go trying to plot a target, way up here, I want to make sure I'm not in the false day criteria already. Otherwise, I just have to kind of wait and make sure, see if that passes. Go back to true. A 0.5 to 0.6 retracement is highly probable according to DR lens, which means I would have to go a little bit deeper. So let's see, my first bucket is going to be, let's go 2 to 4, 3 to 4. So 3 to 4, and then 5 to 6. Yeah. So that puts that price at 41.40.50. 41.40.50. 41.40.50. So this kind of lines up pretty well. These two fair value gaps line up pretty closely with the boxes that I have here for retracement. The other one is 37.25 to 35.50. 37.25. Yeah, a little lower. But there it goes. This is real common when it gets up here to these upper DR levels. It'll pop through, entice all the breakout traders to get in because they think it's, you know, breakout traders always assume the best. They're just going to break out and keep going. So they get in right here as soon as it pops across, and then they immediately get stopped out, and then that's this big candle right here is the result of them all selling or buying, I guess, buying back their shorts. So then that pushes the price up again, and they'll flirt with this to pretty much do the same thing. People are getting ready to jump in right here. It'll pop a little bit, and then turn around and come back down. Eventually, it'll just scream, but it's very often it will just do this 2 or 3 times to just generate liquidity before it goes to where it wanted to go in the first place. Like, this is the target, but why not pick up, you know, pick up all these buy stops along the way? Because every time it gets up here, people are going long or going short. Because this might be where the big reversal comes and comes all the way back down here. Because, you know, we have a good idea that eventually price is going to want to come back down here to gather up this liquidity, but you just never know when. But there's people betting on it right now. They're going short. I'm sure if I pulled up the RSI, this would look real extended right now. Not too bad, but it's a, you know, it's up here at the upper end. Once it hits that green line, that's 70. That's considered overbought. So we could see another retrace down here. I might still get my opportunity. I definitely feel good that it's headed up. I probably wouldn't even put my stop loss all the way down here. I think I would just go maybe to the bottom of the fair value gap. So I'm in the funded challenge account for the 50K account. So I'm $1,313 to the good, $306 today positive. I need to get 52,500 to qualify, so a little over halfway. See how it's just flirting? it's just enticing people to get in right here. When it does pop, it'll make a good little move because there's all those stop loss money sitting right above here. Usually when it grabs that, they sell, or in the case of a short, they buy their shares back, which makes the price move up energetically. Right, any minute, you go pop. I'm always tempted to just try to buy this little blip right here. Usually when it breaks that high, it's good for, a few ticks anyway. I made it over. Almost at 0.3 standard deviation. And that might have been it for the retrace. Go up here and take this out and then come back down. So probably what I'll do is wait and let it tap this and then catch it coming back down. I don't want to chase it right here because it could still turn around at any second, come back down here before making that move. So I know this is going to get taken. So I'll wait. If it does go straight up there, I'll just let it go and then wait for the turnaround, wait for the displacement and a market structure shift. I'll look for a fair value gap coming down, and I'll enter on that and try to catch the move back down into this area, which I'm just as sure that will happen as this is going to happen. Unfortunately, knowing it isn't the I guess doesn't solve the problem. I can't just buy here and expect it to go straight up here, because if it did turn around and come back down here, my drawdown would be, hundreds of dollars with no guarantee that it doesn't just keep going. So, I mean, that's how you blow your account, pretty much, is making that guess that it's going to go here before it goes here. And then it turns around and it goes here, and it just happens to be the day that it comes all the way down here, and you lose your account. So it's better risk management to wait for the highest probability play, which for me is going to be wait till this gets taken out, unless it comes back down one more time. If it comes down here again, I'd get in, but with the belief that it's still going to take this out, and that'd be a nice move to capture. That'd be let's say we took it from right there 40 to 50. That's 14 points. That would be just sick. That'd be $700. But we're into lunchtime now, so don't know. Let's see what happens with the volume. Yeah, there was no volume on that candle. That was a full candle, full minute candle. Another one's about to start here. But you can see the difference in the volume down here from 11 o'clock to 11:05. That's 12 o'clock New York. So, oh, I'm actually looking at I thought I was on the minute time frame. Let me get back to the minute. There we go. Oh, there we go. Volume picking up. Okay. Let's go over here to the left, see if there's anything above those equal highs. So it's hard to say. I mean, I would start looking for the reversal after this point, but there's no reason it couldn't go up here also to catch this liquidity. And then, you know, how far, I don't know. That was the big push yesterday from the CPI data release. I can't see it just bleeding up that high, not when it's this lethargic, but definitely this, possibly this. Once it taps this, if there's no reversal, no market structure shift, then this would probably be next, and then definitely be looking for the reversal to come down here and catch all of this. So we'll go back to the 1 minute, see if I have a fair value gap here somewhere. Yes, I do, right here. That will probably support the move up. Let's see if we get a close below this line right here. Maybe a wick, but I don't think you'll get a candle close below that since it's pushing that way. We'll know in 30 seconds. If it hasn't closed right there, and that minute is up, if it's just a wick, I would consider a long. But if it does close below that, then definitely not. 9 seconds, 7, 6. It needs to pop up here real quick, otherwise it's going to close. Yep, so candle closed, so that fair value gap didn't hold. Next one's down here. In a perfect world, it comes all the way back down here somewhere, and then I can catch this move still. But if it just dinks and dunks around here, I'm not going to get in. This blue line is the 0.5 standard deviation from the IDR, from the drive indicator. I just have to manually put that stuff in there. So that order block is still holding. I think if it wasn't for this order block, we would have already made it up here. But this is kind of holding price at bay. It hasn't closed beyond the middle point or the consequent encroachment according to ICT. Some wicks. He likes to say that the bodies tell the story, but the wicks do the damage, which is true. A lot of times you'll see a you know, an area of sensitivity that the bodies respect, and then the wicks will just wick right past it, but the bodies won't. And it's usually these 50% lines of various levels. So yeah, we're just kind of in between the order block and the IDR box. So that kind of explains the ping pong right there. But that order block's not going to hold. Can't believe it would. Alright, we're going to pause again. Alright, so we're back up here at the top again, making another push. Basically just creating more liquidity, more breakout opportunities. The same thing happened again here. It'll get all the way up here, entice the breakout traders, and then it just turns around and dumps. And since we never know how many times it's going to do that, it's, you know, pointless to just try to guess, unless you're willing to hold, you know, negative for however much that would have been. Let's see, just one tick at a time. It's a nice fair value gap, and we'll see how much of it gets closed in. If it's not much. I'm almost willing to try it, just a couple ticks here. See if I can catch that move. But yeah, as soon as I do, dump all the way back into the DR zone or something. Alright, so I'm in for just a couple ticks. If I get stopped, I get stopped. But I like the way this fair value cap got, you know, bit into just a little bit here. So for me, it's a low risk entry on a high probability potential, since I know there's a target right here. I'd like to see it go up though. Yeah. It's always worth a try. Come on, get up there. Get up there. There we go. Come on. You can do it. I know eventually it's going to just take off. Yeah, that's not good. This consolidation right here sucks. It's not in my favor. It keeps coming back farther and farther. But I don't really want to put any more risk on. That's a 1.5 right there. That's $75. So. Target down here somewhere. There we go, positive a little bit, 1250. Make your move. This is so much work for $25. Yeah, well, that's $25 right there. There we go.
Order filled.
I just scalped a little bit right there, $60, just because I don't want it to come back down here. I wasn't sure it would make it all the way up there in one push, just because of the way it's been kind of hopping and skipping and dropping and hopping and skipping. I had some confidence because this was a pretty wide fair value gap right here, but like I said, I've seen it do this enough to where, you know, it could come all the way back down here before eventually making it up there. So I'm happy with that. Another $60. That pushed me almost up to 400 for the day. And I'm still waiting for the move back down to the other side. So we'll see right here whether that was a good exit or not. You can see how it kicked across the high, but only for a second. I mean, it didn't give any time to, you know, to do anything. In fact, I think it was on the way back down when I exited, even though I tried to catch the top and move that fast. So if it goes all the way to the target from here, then I got out too quick, but it is what it is. Yeah, so my stop loss was right down here somewhere. That's kind of how I, you know, play the trade back, you know, after the fact and see if I made the right decision. You know, if it comes back here and stops me out, then I did right. If it doesn't, then I, you know, only lost out on a 1.5 or so, which isn't a huge deal. But it's almost not worth the anxiety of getting up that close, being in the positive, and then watching yourself go back into the negative. At the minimum, I think I probably would have moved my stop loss to break even when it did that. If I was going to let it ride, I would have made it a break even trade, if nothing else. So if it comes back down here again, do I take another long? If it hits that fair value gap again, I would certainly consider it. This is really sloppy price action. But it's that time of day also, lunch hour. Alright, so yeah, I'm happy with that decision to get out and not hold for the target, for the ultimate target. Terminus, they call it. So right down around here somewhere is where I would have got stopped out. I'm notorious for moving it a tick at a time though too, just to see. But that's how you go from, you know, risking 100 to risking 200 to risking 250 to, you know, it's not a good habit for sure. It's like I only remember the times it works, so it leaves a you know, kind of a positive imprint in my head that, oh yeah, I can do that and get away with it. But when it doesn't work, then it eats up all the gains you made for the few times that it did work. So we're right back where we were on the fair value gap. And most of you know what I'm talking about, but for the sake of those that may not, I'll draw the fair value gap out. Yeah, it's just the distance from the high of this candle, the wick, to the low of this candle, the wick, is an area where price only traded up one way. So that gap is an area of opportunity for, you expect it to retrace into that gap and then reclaim some of the orders and then take off again. And it happens, pretty regularly under the right circumstances, especially like right here where a high was taken out. This high was taken out by this candle, which left this gap, and this is displacement. So you get that combination of things and then a retest back into the gap, and more times than not you're going to get a move away from the gap. So a lot of trades are framed on that idea. It's one of the most popular concepts right now, for some time now, but recently discovered by me. I've known about it for a while, but just now getting comfortable spotting them and using them, because not every gap works. Some gaps, get created and then they get traded right through. So it really takes that combination of liquidity sweep, displacement, market structure shift. When you see all that, then you can have higher confidence that gap is going to give you what you need as far as reaction on price. So we're almost to the top of that bullish order block. We've fought through the middle of it, so it will give way here pretty soon. But that's what's causing the high resistance on this liquidity run. I don't know if I'm going to have the energy to sit here for 3.5 more hours to see how this plays out, but it could be, if it does what I'm thinking it's going to do, it could be a great afternoon. I just got other things I need to do. But passing this challenge is a priority for me, so I feel like that'll be a great confidence booster for me. I've only been trading since July, so to pass one of these would be sort of a validation, I guess, of all the time I've spent and effort to try to understand this stuff. Making the money is one way to test yourself, but you can get lucky and make money. Passing these challenges requires a little bit more consistency. They keep track of your drawdown. There's rules in place. You can't lose a certain amount in a day. You have to make X amount more than you lose. Things like that. When you're just trading your own money, you can lose till you have none. And there's no one keeping you from trading. But they will actually liquidate your position when you get to a certain point if you lose enough. So I'll know that I'm able to, I guess, demonstrate the required knowledge or whatever to do this the way that it's intended. Because don't get me wrong, I've had days where I've gotten just stupid lucky. and made money, and couldn't replicate that. Didn't know anything other than I think it's going to go here, or hope it's going to go here, and push the button and got lucky. So, but that's not sustainable over time. So one more push down into this fair value gap. Come on. Might have to take one more crack at it. And all it's doing is just creating these pools of liquidity for when it eventually makes its way back down. Like those people, I went long right here and got out. There's people that might have went long right here and then did break even or something right here, or went long. So there's sell stops underneath here. There's sell stops underneath here. There's sell stops underneath here. Here's relative lows. This is a high value target right here for liquidity grab, as is this right here. Anytime it makes a low, goes up and comes back, that's two opportunities for people that have went long. So there's two pools of liquidity right here. More here, 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 here. So there's more than enough reason for the algorithm to push price back down below this by the end of the day. Wouldn't be surprised a bit. And on a normal day, I would be more convinced of that, but because of yesterday and this big drop that we had, right? So we're kind of working our way back up, and that's what it does. It does that really regularly whenever you get these news events. It's kind of silly, really, because you're looking at it like, you're looking at it like, if this was such bad news yesterday, why did it turn right around and come back up? It doesn't make sense. So that's why I believe in the algorithmic price control, because that's just opportunities for liquidity sweeps. Whenever these news events come, it basically, see, it goes up here. Oh my gosh, we had great PPI numbers. Goes up here, picks this up. Oh, but because the numbers were good, it's going to make the Fed have to raise interest rates more. So there's like this dual reaction where it'll go up and then it comes down. And you get, really all it is manipulation. It's just a reason to manipulate the market. This was not people just saying, hey, it's a good price for futures today. I'm going to buy. And then all of a sudden everybody's like, oh, well, maybe not, sell. That's not how it works. It didn't take me long to figure that out. Just from watching it, I realized something wasn't right. So these news events are just, mechanisms to manipulate the price to capture more liquidity than would be possible on just a normal day. You can't justify that kind of movement. So in that sweep yesterday, all this liquidity was taken. So everybody that had went short here, they're out. Everybody that had went long, all through here, they're out. And now we're just kind of getting back up to, about where we were before the news dropped. A little higher, I guess. The news dropped right in here somewhere. So, and we were on an uptrend at that time anyway, right? So trending up, news hits, liquidity sweep, and then kind of back to our original. You can almost just draw this line across here, and you would see kind of how that works. So if I just put a line right from here to where we are now, right? So uptrend, 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 uptrend. Anyway, since the guy who explains it that way is the best I've seen at calling where price is going to go. I'm going to say he's probably the one that's right, because none of the people who talk about support and resistance or some of the other retail methods are able to just sit there on a live stream and tell you. I watched him do it today. I sat in his live stream for, I don't know, 2 hours and watched him basically tell us that this was going to happen all the way from back down in here somewhere. Yeah, he knew where that was going to go. So until someone can call it better and give me a theory as to why it works that way, I'm going to go with that. And I see it every day in the the precision of how this stuff works. It's too precise. That's the perfect word. It's not as random as it looks. Especially when you start looking at these 50% points of certain levels, how you can almost bank on it coming to that level, to the tick, and reacting. Or reacting to these fair value gaps. Get back on the 1 minute here. So back into this fair value gap. I think it goes a little deeper this time. No? I could have got in right there again. I could have dipped this 3 times. I'm still waiting for it to, usually before it makes this final leg up, there's going to be some inducement to the other side to get a bunch of people to bite short. So I'm kind of waiting for that now. It'll make that little Judas swing, make the fake move, come down, and then go to the original direction. And that's sort of the basis of what ICT teaches as far as the power of 3, the AMD. This is the accumulation. Then you get manipulation. This is all accumulation right here. Then manipulation would be a big push down. Gets everybody thinking short. They get in, and then it turns right around and rips the other way. Kind of like this. Here's accumulation, and then a manipulation, right? Gets everybody thinking, okay, here we go. And then it jumps the other way. And you'll see that repeat over and over and over. I mean, you can pretty much just go through price and see instances of that. This is sort of a smaller version of it, but you get this push down before the eventual push up. There's always this little fake. Another way you know it's not buying and selling pressure. If it was just buyers and sellers, there would be no pattern of inducement, which is a powerful mechanism for generating liquidity for the market, because people jump in and say, oh, I'm going short right here because it's, big quick move down. Oh, there it goes. It's, it's got all this room to fall. Look at that. There's nothing underneath here. Just fall, fall, fall. And that's just part of the game. Yeah, it could reasonably make a move higher from here. It already picked up this liquidity here, dropped down just far enough to stop these people out. Most people go a tick or two under their entries, like when there's a fair value gap here. Your safe is coming down here, but then your risk is higher too. So when I see it take off, I go a couple ticks below, depending on how big the gap is. This gap is only 1.5. But with one contract, that's $75 if you lose it. I'd be surprised if it went back right way in here and double dipped deeper. Just don't see that a lot. I mean, usually, you know, it may come down, but it'll make the move up first, and then it'll come down. Then it'll make the move up again, then it'll come back down. But not just up, and then, you know, one candle later, come back down again. I guess this could be considered a move up. So I think there's like a macro that runs. Let me see. Can't find it now. It's not in. Here we go. Which ones? Setups and models. There we go, macros. So, macros. 11:50, the New York lunch macro. So, what time is it? It's 11. Oh, wait a minute. Their time is 12:43, so lunch is almost over. Let me see that again. $11.50, $12.10, $1.10 to $1.40. Lunchtime's wrapping up here pretty soon, so it did come back. You know, it moved up, came back. It still hasn't closed this fair value gap though, but yeah, there we go. I should have took that. That would have been a solid entry right here with my risk just to right there. I could have caught. That was a big quick $100. 2 points. Yep. 2 points. $100. That's the thing about trading on a 1 minute time frame is you go look at, you know, try to reference something, or, you know, you're watching something in a video, or you look over at Twitter, and next thing you know, there was your entry, and you look up and it's gone, went left without you. So if it comes back down here one more time, by golly. It really makes a big difference in your approach. It has for me to consider these things by opportunities for the algorithm, opportunity for liquidity sweeps. Everything then has a purpose. You know, like, why are these lows taken out right here? Why are these lows created like this and then taken out here? You know, it's a pattern that repeats over and over. It doesn't make sense in the context of just people buying and selling something. Especially when the price gets way up here, you're like, people aren't rushing to buy that. A lot of times that's just them pushing price higher to induce people to get in and capture liquidity on the way. I mean, all of us have been watching this all day. If we wanted to buy, we would have bought down here. you know. Um, and the only reason that I'm buying here is because I know that it's going to reach up here to get this target. I'm betting on the algorithm doing its job, not people buying something that's way overbought already. Because I wouldn't have any confidence in that. I wouldn't have any confidence if I bought right now that people are going to keep pushing the price up, especially on futures. It's not a buy and hold kind of investment like Apple. You can buy up here because in 6 months it's going to be, $5 higher, just because that's the nature of how stocks work. But futures don't work that way. You don't benefit from it that way. I guess you can, but they're not as likely to be held like that. Since there's limitations on the contracts, it's not a long-term investment by design. So lunch is about over. I'm betting we see a nice little move here in about 10 minutes. I'm going to pause for now and go grab a cup of coffee. This is already, it's an hour right now, hour and 1 minute long video. I don't usually make videos this long. All right, gee, what a surprise. Big inducement move right here. Get everybody going short, collect this liquidity from these stops, and then here we go. There's never a guarantee it goes straight to the target, but this part was pretty predictable. There will be one of these before it eventually does make it up there. Look how close it got, too. All the people going long right here thinking, oh, it's going to break, it's going to break. And I've done that before. I learned my lesson. Just because it gets close to a target does not mean it has to hit it. That's by design to trap retail traders who are looking at that level and expecting a breakout to the upside. So they all get in long, trying to catch some of that move, get in early, and then immediately get stopped out. And then, and it's so frustrating to watch, because then after you get stopped out, price goes right back to where you originally knew it was going to go. And it creates a, kind of a dilemma, because if you're not careful, you get into the mindset that, oh, it's going to go there eventually, and you start dropping your stop loss, and that one time that it doesn't is the time you get trapped. And, the market makers know that. It's just random enough to where you can't always plan on it doing, the same thing. That's why I've sort of adapted my philosophy. See, it's doing exactly what I knew it was going to do. But I chose to wait until I get the breakout and then the move the other way. So because there's still liquidity here to be taken, and it created more liquidity right here. By coming to the bottom of this fair value gap, people went long right here. I probably should have went long right here. I literally could have been a one-tick stop loss. I could have had a 10-to-1 risk to reward trade right here. But I was doing something else, and like I said, on a 1 minute chart, if you turn around, I was sending a text to somebody in the Discord. I turned around and it was already up here somewhere. So, and I do my best to try not to chase anymore, because then I feel like I'm not disciplined. Whether I'm right or wrong, it just feels undisciplined. It feels risky to do that. So I would rather just let it go and catch the next setup. The more I do this, the more I realize there's always going to be another setup. Why build up the anxiety and the frustration of getting in something that's halfway done? Because I could have jumped in right here, but now the move's half over. if it doesn't go to my target, it turns around, then I'm kicking myself for chasing price and being an idiot. I'd rather just wait till it does its thing, turns around, and I look for my optimal entry. Much easier on the psyche. Alright, so look at that. Comes right up, kisses the high, but doesn't break it. Just creating more liquidity. I really wish I would have got in right here. That would have been such a nice move. 49.25 to 54.50. Wow, 5 points. Alright, so price makes its break. Okay, so how high it goes is hard to say. Like I said, there's couple other, levels here. It looks like it's going to make it up there. I wouldn't doubt it. If it's already that high, yeah, look at that. Man, I should have got in that. All right, that's not buyers and sellers. That's a liquidity sweep. It's going to take that, and then it's going to turn around and dive the other way and swoop down and pick up all of this. And if you, look at this thing over any kind of time span, you'll see this pattern. That's really all it does, right, is these sweeps. Up and down, capturing liquidity. Higher highs, lower lows. Then you get, trending days like this, or but, liquidity sweep, right? This is a liquidity sweep of this. This is a liquidity sweep of this. This is a liquidity sweep of this. This is a liquidity sweep of that. It's just ongoing. So knowing that is, I feel like, gives me a advantage on how I attack this stuff, as far as looking for targets and reversals. Like, I know once this gets taken, the odds of it going up here are slim. But a lot of times what will happen is it will turn around, make people think it's going back, and it'll reverse and come up a little bit more. And it'll inch its way up through these fake outs of going the other way. Comes down a little bit, turns around, stops those people out, makes a new high, turns around, induces people to go short, comes back, goes up a little more, and eventually it works its way up to where it's not such a huge, it doesn't take one leg to go. Like from right here to right here, it's not going to make that move. But I could see it making several of those little fakes to get up close, and then doing like it did right here, and eventually taking that top off. I wouldn't be surprised a bit. And I have tried to call the tops before and gotten burned doing this, thinking that it's as high as it could be, and it just rips, keeps going. So what I do now is I'm waiting for a visible shift in market structure, which means it would need to come all the way back down and take out one of these swing lows. And really, the first swing low would probably be here, depending on what this next candle does. So yeah, it would take a good bit of retracement to convince me that it's actually coming all the way back down. And really, this would be safer to catch the move from here down to here if it goes that deep. But like I said, just, it's kind of a waiting game now to see how far it's going to go up before it does turn around. So let's see what happens here. Man, and that push did trigger off of that fair value gap too. So that first trade that I took, where I just scalped a little bit, this is what I was hoping for. I was hoping to get in on the move. But I wasn't able to time it. Would have been sweet though. So yeah. I don't remember which one of these I got in on. I got in on one of these really early ones that just went a little bit. And then I thought about it a couple times when it dipped here. But this is the one I mean, I couldn't have called this any better. The inducement, the liquidity sweep, the fake, the actual move. I mean, this is day trading 101 now, is to have this kind of in your mind, you know, the accumulation, manipulation, distribution. If you keep that in your mind, power of 3 AMD, and you look for that pattern, you know, you're ahead of the game. Because a lot of times, you know, this, if you don't know that, you're getting in short here, thinking it's the move is topped out, you know. But if you're planning for, or in the back of your mind, you're considering that potential Judas swing, which is the fake. Some people call it a Judas swing, some people call it inducement. If you have that in your mind, then you're expecting the big drop, and you don't get in because you have a target in mind up here, and you're saying that before this target can be hit, there has to be an inducement, there has to be a liquidity sweep, because that's the algorithmic nature of price action, is to do these things over and over and over. It's to trap retail traders and pair these people's buy orders with these people's sell stops. So, you know, the institutions that actually move the market like this, that make these big moves, that create these gaps and these huge candles, they need liquidity, and this generates that liquidity for them. Someone has to lose money to give up those shares for these people to then buy them and take them higher. So they were pretty much buying right here. When it's on its way down, they're accumulating their shares, and then boom. So now we'll get some consolidation. And yeah, I could definitely see it now with consolidation. I could definitely see it moving up some more, because right now people they're betting. Everybody's betting right now. You got half the people are saying, well, it's going to go higher because, you know, there's other highs over here, and you got the other people saying, yeah, but, you know, there's a long way down, so they're going short. So sell stops here, buy stops down here, or maybe I got that backwards, I'm not sure. But stop loss orders are at the top and the bottom from people who are already in the market. People are buying right now. They're buying it up. You can look at the volume down here, right? So these are, yeah, thousands of contracts being bought up right here. And the price isn't really moving at all, so it's just accumulating. And you'll get little pushes up, little pushes down, inducement, 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 to draw in more and more liquidity, and then it makes its move. And it'll do the fake again, most likely. It doesn't always do it though. I mean, you can't bet on it. That's the problem. It's random enough to where sometimes when it goes up right here, it just keeps going up. So, I mean, otherwise everybody would just do that. So it's, you know, it's a 50-50. You know, when you see this happen, it's not a surprise to you, and you aren't conditioned to just get in short when it dumps right here. So you may not be able to take advantage of the move, but you don't have to get burnt by it either. So, you know, it works out in that respect. I might miss, you know, this move if it did go straight up, but I wouldn't get trapped by this move. So DR Lens does say that the max extension time is almost at the end of the day. So there's a good chance there could be a retracement and then a push at the end of the day. If we're factoring time into the equation, which is a good idea. So yeah, some consolidation, a couple pushes, one nice retracement, and then an explosion up. And that would pretty much just put us back, on track for where we were before the big dump here. Yeah. I'm sorry, I hate when people do this. Keep jacking with the screen, but I'm switching time frames and trying to stay on what I'm used to seeing. So I want to get back on the minute. There we go. So yeah, another fair value gap right here. Could support, move higher. If it dips back down into here. But like I said, I'm waiting for the reversal of this, basically. I'm waiting for the fair value gap the other way, yellow, showing a willingness for, price to move down with some momentum. And then once, I guess, probably this swing low at the minimum gets taken out, that would be a good opportunity for a short. I mean, technically, these are swing lows too, but as is often the case when it's doing this little move up, up into this area right here, you'll get some reversals, some retracements that are relatively deep. So I don't want to play it too tight. I think that we need to come back down here to be convincing that there's actually been a change of character or a break of structure. I'm getting tired. I don't know if I can sit here much longer. I'm trying to hold on for this. I'd hate to miss the best move of the day, though, because I'm tired. The smart thing to do would just be to call it a day. I've already got well over my target. But at the same time, I want to get this passed as soon as possible, too. Oh, cool. M7 liked my tweet. Hang on. So I tweeted earlier, I showed that I was halfway on my challenge. Now here's the stats for the challenge I'm on right now. It's a 50K. I need to hit 2,500 profit. So I'm a little over halfway. I think this is closer to my actual. This was before my trade earlier, so I'm at like 1370 something now. This is after fees and commission and everything. So looking good. 29 wins, or 29 trades, 18 wins, 9 losses. Average win is 183. Average loss is 180. But I took one for like $400. It was just a stupid move. Like that's what it looks like right there. Basically, there's that $400 loss, and then ever since then, it's been doing great. And I remember that I was using Trade-A-Bait, trying to mess with trailing stops and auto break-evens and everything else, and I had like 4 orders going, and I canceled the wrong stuff at the wrong time. It was just a big mess. I got back in, and I was able to get it back with, I recouped that, but it still showed up, as a losing trade, and it was a whopper. So anyway, I posted that today with a comment saying, having a great ODR session. DR, IDR has me over halfway on my funded challenge. Wouldn't be a big deal, but I've only been doing this since July and only DR, IDR a couple months. So M7 responded to that, saying he was happy it's helping, which for sure it is. So I definitely appreciate his all the work he does and the team of people that are working in the academy. So if you're not a part of it, get involved, because they're really breaking out some tools, some information that's just, changing the game as far as trading goes, I think. And I've got some other videos on my YouTube page for beginners to kind of go through and understand the DR-IDR strategy. Okay, so some more inducement, right? Here we go, we're breaking short. We're going short. The market's turning around. Or is it? Yeah, I still think it's got some room to go up. When it gets up to this all-time highs like this, or highs that haven't been reached in a long time, it plays this game where everybody thinks it's topped out. There's no reason to go any higher. Who in their right mind would be buying this high? It's got to turn around and start going the other way. People taking profits, selling, yada yada yada. Retail mindset. And then for some reason, somehow it picks it up and it goes back up. Some more, and stops out all the people that are up here betting on it going short. So from that perspective, the algorithmic theory just makes a lot more sense to me, because it's going to turn around, it's going to push back up, and people aren't buying this right here. I mean, there's no reason. I guess if you think it's going to make a new high, but that's just not. It's just risky. It's oversold so much right now, or overbought so much right now. That if you talk to average Joe retail trader, or definitely institutions, banks, hedge funds, they're not buying up here. They don't buy when prices is high. They're the ones buying down here when the price is being pushed down. They're buying. They're doing the opposite of what we do. We get right here and we're thinking down here, oh, better sell, but I'm missing the move. Sell. And they're actually, they're buying down here because they're going to sell up here. They know how it works. So again, see, inducement, create liquidity, grab liquidity, over and over. That's the stock market. At least the futures market. It's the same with stocks, but I think this is a little different because it doesn't have the same investment type strategies being applied to it long term over years and years and years. This is get in, get out, get your money. That's why I don't believe that it's people buying at these high prices. This is liquidity being created by they're called liquidity providers, SLPs. They move the market, move the price to encourage us and invite us to buy and sell at these levels. It's not us driving the price to these levels. And I've tried, like I said, I've tried guessing right here. I've just gotten burned enough to where it's not worth it. I'm going to wait for my signal. I'm pretty sure it's going to go up, but I've made that assumption before, and it turned around and went the other way on me, or it went the other way enough for me to get stopped out, put it like that, to where I was in pain and didn't want to lose any more money. And then it would turn around and go the other way. So I'm just going to forego all that. There's going to be plenty of opportunities to get good trades that have good probabilities. There's no reason to take the ones that are just all chance and risk. So we're back in the accumulation phase. We'll look for manipulation and then a redistribution. That'll either come or there'll be a market structure shift. Either way, I'll have a plan for what I want to do depending on by what the market tells me. So I guess I probably gained the most ground in my learning by trying to approach it that way. So look what the market's trying to say. Look what it's telling me that it's going to want to do, and then have a plan for that. So I listened to ICT's live streams, and that's one of the things he just really preaches and goes over and over and over is find your narrative, make your plan from that narrative, wait for it to show its hand, and then capitalize, rather than just blindly saying, well, I think it's going to go this way and getting in. No future in that. Get lucky once in a while, build false confidence. That happened to me. Thought I knew what I was doing. Made the same mistake I guess most people make. I hear enough preaching about it, and for some reason, I guess new traders are just blind to that. They just think they're going to do it different. They know better, and the greed factor takes over. That's one of the things about this that's so just, I don't know. The opportunity, it's like watching. There's an ATM here. It's just an ATM. You can see the potential to make thousands of dollars right at your fingertips at any minute. There's nothing else like it. There's no opportunity that's easy. I'm not going to say easy, but just accessible. It's just accessible. It's very accessible. It's not easy. But you don't have to have 4 years of college. You don't have to, have a certain job, social status, whatever. Anybody can sit down here and have the opportunity to make a boatload of money. All right, so here's our inducement, manipulation down into the fair value gap. This would be a decent long right here with just a couple half point of risk or so. But this could be the time when it does the market structure shift too. So, don't want to be on the wrong end of that. I'm tempted to just risk like $25 right here. 2 ticks. Alright, so I did.
Order filled.
I risk a couple ticks and see what it does. I risked 3/4. 3/4 of a point, which would be $37. And if I just try to target like a new high right here, that would be fine. But all I did was follow the accumulation, manipulation, distribution idea. Like I'm up 37. I'm even going to go to break even right now, and this trade will not cost me anything. So however high it goes right now, yeah. I'm going to get stopped out. Yep.
Stop filled.
That's fine.
Order filled.
Try that one more time. See if I can get that back. I didn't really lose anything but the commission, but so yeah, there's, I can get to 25 bucks or so. Bring this down. Let's see what we get. There we go. Boom. Alright. I had a $50 target there or so, but it's going to pop up through there, I think. So back up to break even again. Huh. Well, and I hate it when it does that. It's hitting my target and it's not giving me the money. There.
Order filled.
Okay. So there was a quick 50 bucks. It's going to keep going up, but that puts me over 400 for the day, so that's nice. But you see how that's the plan, right? I see the accumulation, I expect the manipulation, I see the fair value gap. I know that this should hold at this level. Get in, you get up a little bit, just go to break even because you have an area, a point of interest here that you know is high probability. So I wasn't afraid to, put my stop loss up tight, take the chance. I got stopped out once, but the plan is still good. You just don't know how many of these you're going to have to deal with. So the same plan was still good. Got back in, did it again, and it worked out. So it's going to go up here. It's going to make this new high. And, there's still 2.5 hours until market close. So it could feasibly play this game. And I don't know, that's a long way. That's a long way. That's where I'm at 59. That would be almost 20 points. No, I'm going to say it's not going to go that high. It's going to just make this trip a few times, fake some people out, keep creating these opportunities to make liquidity. It needs to do that because once it turns around and heads the other way, it's gonna do it quick and it's gonna do it violently. And there's gonna be a lot of people that get on board and they're gonna make money on those shorts, but they can't hold everybody back all the time. They have to create those opportunities. Those are the best opportunities because we're gonna be making money as the market goes down, but the market makers and the institutions that generate all this stuff, they're going to be also making money through liquidity grabs as the market falls. So it's sort of a trade-off, but that has to happen. It has to come down this way. And see what I mean by it just breaks just enough, right? Why did the buyers all of a sudden stop, right? Why, the people that were buying here, why didn't they keep buying? If it's a good deal, it's a good deal. Because that's inducing breakout traders to get in the market, create liquidity for the market, and then it turns around and takes that liquidity from them. Very rarely do you see a new high created with a move that just rips 30 points, because all the breakout traders would get paid big from that. And I did some back testing on breakout trades, and I just didn't see it. I saw too much of this, where it jumps up just a hair and then drops back down, jumps up a hair and drops back down. It just didn't seem like it was worth it. But apparently, there's a lot of teaching, like out on YouTube, that says this is the way to go. And eventually, you'll get your breakout, but you're going to get stopped out 2 or 3 times first, so it's not really worth it. You don't know which time is going to be the breakout and which times are going to be the fake outs and the reversals. So it just doesn't seem like a high probability setup to me. Volume's picking up. So now this would be the low that I would need to see broken for a change of market structure, change of character. That's the signaling that the market is basically intending to move in the opposite direction. You'll always get that when it does. I mean, eventually it has to come down low enough to break one of these lows, and usually when it does, it keeps on going. So it's the odds are higher once it comes below one of these swing lows. When it breaks a swing low, especially if there's an energetic candle or move, that's a kind of a fingerprint of a solid reversal from an area like this, from this position. All right, so let's drop back out here. What it looks like. So on the IDR side, we're already up to standard deviation of only 1.0. Wow. It was such a big range. This was such a large range that the 1.0 was a pretty good amount. According to DR lens, we can expect a max extension of 1.6 to 1.7 are real high probability. So this is what I'm looking at, max extension, 1.6 to 1.7. So we're in the 1.0 area right now, which is 1 to 1 point. Yeah, we're over 1. So that would be here. That's right. We have a higher probability bucket at 1.6, 1.7. So there's really a better chance that it goes up to over 1.5 than where it is now, if you're looking at probabilities. And then for time, you can see the max extension comes in the last 15 minutes of the session. So putting that information to use, this becomes target 1.5, 1.6, 1.7 by end of session. Okay, so we do that. We put our max extension time kind of right here. What time is that? That's 4 o'clock, yep. So we're looking for it to hit something like that. And that would make sense because it doesn't take you all the way up there, but it does sweep this liquidity. So there's 2 more potential opportunities for good liquidity grabs above these swing highs right here. There's always liquidity above these because these are places where people chose to go short. This would be almost a 2.0 standard deviation move, and let's see if DR lens has a probability for that. So it does. The odds drop, but you've got over half the probability if you use this 0 to 100 percentage kind of approach, to where 2.1 standard deviation is still high probability. I mean, it's still up there, better than a halfway chance. And since there's a daily high up here as a target, you put all that together and you can kind of, it's not out of the realm of possibility. So you kind of judge if you're already up here in the next 30 or 40 minutes, then this is probably going to fall. But if you get some retracement down here, maybe you dip back down to this order block, since it was traded through, this would still be support. Price will definitely bounce when it hits that. When I say that, it did its job here. Price rejected off of it. Usually when that happens and it trades through, then it also does it on the other side. So it just kind of depends. But I'm looking for this ultimately as the highest probability, but 2.0, 2.1 as a chance, a good chance. I don't know. What the problem now is for me to try to formulate a plan to get a trade long. I know what to do to get one short. I'm looking for the change in market structure. I'm looking for fair value gap to the downside. I'm looking for this to be broken, one of these swing lows. Going higher, so we got a fair value gap right here. If this gets tapped into, that would be another potential, just like the one I took here. I used this fair value gap to take that move, a couple little moves. So here's another fair value gap that was formed. If price trades back down into that, I might use the bottom portion of it, so I don't have to put as much risk on. If it comes down deep enough into that, then I'm fairly certain we're going to get, That's the great thing about DR Lens is you have 20 years worth of data compiled on what's happened on this day, at this time, in this scenario. When price creates this confirmation at a certain time, it tracks what it did every time that happened for the last 20 years, and because of the like I said, the algorithmic nature, you can kind of build that into a pattern that's then usable for making, prognosticator predictions, whatever you want to call it, about, since it's done this so many times in the past, there's a good chance it's going to do it today. And that's basically what the DR-IDR strategy is all about. And it's amazing. I mean, there's nothing like it out there right now. Light years ahead of supply and demand and moving averages and stuff like that. I'm so tired, but I still want to see how this plays out. Kind of stuck here. I'm going to pause the video. It's been going on for, I don't know, hour and a half or more now. I'm just kind of jabbering. I know you're probably more interested in what the price is going to do than what I've got to say, so I'm going to pause it, and when we get a move or I do a trade or something, I'll fire it back up. Yeah, hour and 48 minutes. This is ridiculous. All right, haven't had any opportunities to take a trade, but just I'll show you where we're at here. Still making a move, so I was expecting it to come down here at some point, hoping it did. I actually missed a good entry on the 1 minute time frame. I could have caught a piece of this move, but I was sort of got wrapped up on some other stuff. Here's a great fair value gap entry right here that I just missed. I would have been all over that. That would have been good for, let's see, 56, yeah, 11 points. Don't tell me that. That's 550 easy dollars. That's not even one I would have really had to sweat much on. That's what I mean, man. God, just, this 1 minute time frame. But if you go to, oh, wait a minute. I'm on a 5 minute time frame. This is a 5 minute. So what's that look like on a 1 minute? Yeah. It might not have been as obvious on the 1 minute either, now that I'm looking at it. I mean, it looks like it never would have tapped back down into it. I call these runaways, where you get a great fair value gap, but it just never comes back to test the gap. So if you're waiting right here with a limit order, or you're waiting to press buy in this area, and it just rips, you miss it. So But on the 5 minute, and I've got the 5 minute open over here. This is actually where I kind of saw it. I've got the 5 minute open over here. And here's the fair value gap right here that it steps into, and then it takes off. So, but still looking good for, just targeting here. At some point, there's bound to be a retracement. It's rare that it just gives it to you this easy. I mean, people that got in long down here just had no anxiety at all. It's been all profit, all up. These are the best trades to get. And they're, unfortunately few and far between. They happen every day, but just being able to sit there and catch it is the challenge. So here's another one here. Great fair value gap, no retest. Got away. So that's why it's handy to keep, a couple different time frames open. These don't look exactly the same. It's 5 minute time frame. Oh no, this is a 15 minute time frame. Duh, dummy. So yeah, I was wondering why it didn't match up. I'm looking at a 15 minute time frame here. I'm seeing a fair value gap, but no retest. But when I go to the 5 minute, then this is the one I was looking for with the fair value gap and the retest. That's where I would have got in. Look at that, no anxiety at all. Just immediate tap and run. Gosh. I gotta catch those. I mean, those are the difference between having to work a 9 to 5 and not. I mean, you catch one of those, that's $500. That's the one you need to catch. I'm catching the $60 and $70 ones, and then I'm dropping the ball on the ones that make the difference. So that's just part of the learning process, I guess. Let's see. So as far as our target here, we've got a daily high here. This one is a wick consequent encroachment on the 15 minute time frame. This is something ICT teaches. When you find these wicks like this that are just really, really long, you put the Fibonacci on it and you measure and you get the middle. So like I did that, and then I put a line on the 50%. And occasionally that's worth a low risk trade when it gets up to that area. A lot of times it will reverse on that point. So if it gets up that high, which it's getting there, I wouldn't be opposed to risking 2 ticks, $25, to catch a big move to the downside. So that would look like I would need 73.25 approximately, and 73.50 for good measure. And it's it's looking like it's it's time to turn around. So let's look at some other stuff here. Oh, perfect. Got a volume imbalance up here too. Oh, no DR clusters to speak of. Interesting. In one right now. So okay. Good opportunity for a reversal right here, back down into the fair value gap and a final push. This is those daily highs, and then these are a couple relative weekly highs up here, I believe. Yeah, so there's to the left over here, if you go far enough. Yeah, I'm not on a high enough time frame. So if you go to the hour, we've got this, I don't know why I called it relative. It looks like there's only one. Or maybe, yeah, I took the low side. So here's a weekly high right here, and another weekly high right here. And I took the first one as a potential target. So these are real appealing right here. If it gets up close to that, that's big. That's institutional money there, hedge funds and stuff, you know, on the weekly chart. Put money in. So lots of potential there for, you know, continued run up. And that might be the ultimate target. I don't know. But it doesn't have to hit it today. Tomorrow's Friday. You know, no reason to get in a hurry. Good chance that this one gets taken today for sure, and then kind of play it by ear from there. No matter what, though, there's lots of these make good good points of interest back on the way back down for rejections off of these levels. They're always good for a bounce, you know, a few points coming down. Maybe not every one, but you know, you put a little bit of risk on some of them. That's just crazy. This is a big day for ES, man. And had I been comfortable enough, I mean, the rule-based system that I'm following tells me that I should have been in here, down here. So multiple, and I was watching this as it happened. I was just listening to a live stream and kind of focused on what was being said. I saw this happening, but I just didn't have the guts to pull the trigger, mainly because these wicks were so long that in order for me to put my stop loss down here, I'd have been looking at, you know, 6 or 7 points, which would have been $350, $400, 8 points, or yeah, how many points is that? From 28.50 to 24.50, so it's only 4 points. Yeah, well, still $200 of risk though. And at that time, I was only up a couple $100. I don't think I wanted to give it all back, so I probably wouldn't have took that. If I was sitting there now with the gains that I made today, I would probably have taken that because it's just so juicy. I mean, price did not want to come back below the IDR and had a nice double rejection off the DR. So everything was saying go long right here. But I just didn't capitalize on it. I saw some people that did though, posting like 24-hour gains. That means they risked a point, made 24 points or something sick like that. But at the time when I was watching it, there was a news release right here, and that kind of confused me a little bit. I saw this liquidity was not taken, so I wasn't positive that it wasn't eventually going to drop down here to take that low. And it's kind of a relative equal lows too, if you look at this area here. So that was what I was fearful of, and kind of played into my thinking between the news release and this potential liquidity grab down here. So I just kind of waited to see what happened, and that's what happened. Took off. But I learned some good stuff in the live stream. This move was explained and pointed out to me. Something I can look for. I learned how to know what to look for at this time of day for this type of move right here. So this was 9.5 points right here. Would have been a good one too. So, all right. So we're tapping this daily high now. So my furthermost target as far as DR IDR is hit right there. There are, I mean, it can go higher according to DR IDR. The odds just get lower and lower, for like a 3.0 standard deviation move has only happened 4 times. since the records are being kept. Whereas where we're at right now, you know, in the 8, 9, 10s, so a little better odds for that. But not saying it can't, you know, it has before. So still taking into consideration the max extension is in the last 15 minutes of the session, so that's important to remember. But the odds for the retracement also pick up a little bit towards the end of the session as well. But you're not going to get a max retracement. It would have to come all the way back down here in that period of time. So max extension is definitely higher probability for that to pan out. And nothing wrong with hitting early. I mean, yeah. Stuff's just amazing. So it will jump when it hits this. This is a clean daily high. Let's see what level that was. What did I say? 41.72.75. 41.72.75. Let's borrow one of these lines. 41.72.75. Right there. So once again, now we're like we were down here, right? We're at a point of interest, an area of liquidity is resting right above that. So we start playing this same game over and over again. More consolidation, breakout traders, inducement, accumulation, manipulation, and a distribution. That's the pattern. If you can catch a fair value gap in there somewhere, you know, potential for entries, but it's too high now. I mean, I still expect it to maybe go out and take that other weekly high, but not enough for me to bet on it. Like I said, I'm just exhausted right now. But we'll see if it spits up across here. Sometimes it's amazing the way the movement comes when it breaks across here. I've seen it just explode, you know, and those are the ones you want to be in ahead of time. But it'll pop up so fast and then come back down just as fast. And if you don't have a take profit here that automatically pulls you out, you can't click it fast enough. You'll lose $100, $150 on the way back down from just your slow reaction time. So if I was going to be in right here, I would have my take profit like right here electronically. So that way when it kicked it, it would automatically, you know, put the money in my account. There's nothing more frustrating than see it go where you expect it to go, hit your line, but by the time you hit the button, you know, to exit, which would be this one right here, it drops back and, you know, it's not where it was a second ago. And it doesn't take much. I mean, that's $100 right there, 2 points with one contract. That little gap right there is $100. So it's nothing for it to jump up here and jump right back down here. Like on a wick like this right here, it can shoot up there and shoot back. Hasn't been too bad on the wicks. This has really been some of the best price action I've seen in a while. This is great. I hope it comes back to. This is what I had been back testing on and familiar with, and saw these setups very clearly. And then a couple weeks ago, the market got really, really different. I saw other people saying that too. That it wasn't giving the same opportunities. It was all this kind of chopped crap right here. Yeah, no fair value gaps, no runs, just, you know, death by 1,000 cuts. I don't even have anything close by. I mean, if it comes all the way down here to 62, which would be really a stretch, it would be worth looking at. 175. Wow, that's a 3-point fair value gap. It doesn't look that big, and it's shrunk down like that. That's a nice one though, yeah. Come back down into that, I'll take the trade. You can see how every fair value gap on this run has been respected. It hasn't knocked the bottom out as far as what the gap would be considered. It just comes into the gap and then explodes up. Into the gap, explodes up. This one, it looks like it might have actually went through the gap. Yeah. And some of these might be different time frames too. Yeah, see on a different time frame, it didn't actually go through it. Right to it, right? That's that algorithmic precision. Here's the, come on. Alright, so sometimes when you expand it, it does that. I got the auto fit off, yeah. Anyway, so yeah, every fair value gap has been money on this run. So maybe this next one will be too. Let's set it up and see. Definitely time for a retracement. But it's not going to fall that, it's not going to go that deep before it takes that high out. Ugh. Don't get me wrong, I hope it does, but just, it seems like a long way to go for retracement. And not a full-blown reversal. I wonder if there's a little bitty fair value gap in here. There is. Look at that. Just a little bitty one right there. Like 2 ticks. 1, 2, 3. That's actually enough right there. That counts. Alright, so that would be another situation where we would have very, very little risk. I mean, if it pops to right here, it's $9.75, $50. But, you know, I'm looking at 3.5 points. That's, yeah, $175. We make this a $600 day. Little 1 tick gap right there. I should have took that. It didn't hit, but a lot of times I'll give it that extra tick for instances like this where it just falls one short. That can be just the broker, you know, the spread amount. There's a lot of times things will come within a tick of something, and I consider that a hit. It's the smallest measurement on in the market. I don't think I'm going to do this. I wouldn't be. It wouldn't be bad at all. I'm really tired, and I want to end the day on a high note. So, you know, whereas I'm pretty sure this is going to still go up and take this out. I've already called it a couple times and was able to profit from it. I don't want to push my luck. So there's my end. That would have been my order, my limit order or market order would have tagged me in right there. And I would already be up. That's $25. 50 $50 right there. Where's the 5? Wow. Oh, wow, that's good to know. Different time frames have different numbers of contracts. If I would have bought right there, I would have accidentally bought 4 contracts. Oh, wow. That would have been a surprise if it went the wrong way. Or the right way, for that matter. I mean, 4 times as much. Man. I put a point on there, but 4 of those things is $200 a point. It's going to go up here and hit, and then I'm going to say, oh, I should have done it. That would have been another $400. What do you want to bet? Every other fair value you got's been respected. Why do I think this one won't be? It's not showing a willingness to go any deeper, right? 1, 2, 3 ticks. But I would never forgive myself if it just turned around and dumped the other way, and all it would take is like 2 points for me to give up all of the gains that I had today, which would literally be like right here. If it came down to here, that would wipe out my entire day with 4 contracts. It's just not worth it. No. Well, when you look at it like that, it makes it more look like a better trade. It's rejected all those times. But eventually, when it does turn around, it's going to look just like this. It's going to make a move like this. It's going to make the inducement move up this time. Get everybody in just like I was going to get in, and then it tanks. And then, you know, usually when the reversal comes from up here, it's hard and fast. It wants to get as far down as possible to keep people from getting in. Because if you see it just bleeding down, people are getting in. But if it jumps, makes a big powerful move down, people think, I already missed the move, and it discourages a large percentage of the people from getting in, and that's by design, because it's going to go down a long way, and anybody that gets in right here is going to make a lot of money. And when we're making money, the market makers are not making money. So that's just another pattern that you'll recognize if you sit here long enough. When it finally decides to make that move for the other side, it doesn't do this slow, you know, the first portion of it is a big hard move real quick. And you're like, well, dang. Then you're afraid to get in because you're waiting for the retracement. You know, there's always this little retracement, always a retracement. And it's the fear of the unknown. You don't know how deep it's going to be. You can acquire a good bit of drawdown. Your account can go negative quite a bit while you're trying to wait that out to turn around and eventually go back in the direction you were hoping for. So that's just part of the plan. If I put myself in their shoes, I would design it the exact same way, because I know from sitting here, I've seen that move, and I'm like, it's already gone. You know, it's too far. And I don't get in, and then you have to suffer because you watch it go all the way back down, and you know, you never have as good an opportunity as you do up here when you have a low risk potential, where you can put a stop loss up here above a high. Once it gets down here, well, now you can't put your stop loss up here. It's too much, and so you have to put it somewhere in here, which isn't as safe. So, you know, it changes the whole dynamic of the trade by waiting that few seconds for that move to push down, you know, if you're around here somewhere. All right, well, I'm going to wrap it up. I'm done for the day, so I wish it would have been more exciting, but hopefully I put some information out there that will be helpful. Anyway, have a great day, everybody, and we'll see you next time.